people are starting to move back into the physical spaces with the uplifting of MCO. But I believe, webinars are always a great way for us to gain insights from experts who are in other part of the world. So today with us, we have Ivo all the way from Amsterdam, right, Ivo? To share
Geneva.
his insights.
Yeah.
Sorry?
Geneva, Switzerland.
Geneva, sorry, from Geneva to share insights. So I'm Faros, the ED for Global Compact Network Malaysia. Thank you again for joining here. Now, just let me do a little bit of context setting and also introduce Ivo properly to all our audiences today. Welcome to our webinar for this month on how climate finance can be at the heart of economic growth post-COVID-19. Now, the COVID pandemic is rewriting how we operate at individual, corporate, and society levels. Now, some see this as an opportunity to reset how things need to be done, whilst others see this as bread and butter issues as the only material matter in the short and mid-terms. Now, just earlier in the year, the World Economic Forum risk report for the first time had indicated social and environmental risk as more likely and more impactful than economic risk. Now, fast forward today, in a new research by WEF, the collective views of a cross-section of risk professionals highlights economic risk as a top three, with environmental risk now demoted to a top 20 standing. Now, is this the situation of the new normal, where concerns for economic well-being will eclipse environmental and social factors? Or is this just a healing crisis before we come together to realize that a sustainable future cannot be achieved if we continue to decouple ESG factors? Now, to give more insights into this, we are very honored to have Ivo Mulder. Ivo Mulder is the head of the climate unit at UNEP, and he has initiated a number of innovative projects that develop business cases for the private and finance sector to tackle environmental challenges. He co-founded and directed the Natural Capital Declaration, now rebranded as the Natural Capital Finance Alliance. He co-initiated the RED Plus work at UNEP Finance Initiative in 2011. At present, he is focusing on developing a number of novel private finance facilities that aim to unlock the direct and private finance towards zero deforestation, agriculture, and restoration of degraded land. He has over 12 years of professional experience working for UNEP, private consulting firms, and with NGOs. Ivo is a fellow of the Royal Society of Arts and member of the Dutch Association of Sustainable Investors. During his free time, he pursues a variety of outdoor sports such as triathlons, diving, and mountain hiking. Now, before I officially handing over to Ivo, some house rules. We have a chat function in our Menti page. If you go to www.menti.com, type in the code 345727, you will see this question page. You can type in your questions, and in the questions, you can also upvote your questions. So the most popular questions will ask that in the Q&A session. At the end, 5 minutes before we end, we'll run a Menti poll with everyone. We'll walk you through how to do that in a while. So with that, Ivo, the floor is yours.
Great, thanks a lot, Faros. Just double checking if everyone can hear me.
Yes.
Perfect, and you can also see my screen?
Yes.
Okay, well, I'm very grateful to the UN Global Compact for inviting me to present to you all. I'm based in Geneva, Switzerland. I work for the UN Environment Program, which basically is the environmental authority within the UN system. Within UNEP, I focus primarily on how do we create incentives for businesses and finance to switch towards a low carbon sustainable economy. I think there's still a persistent belief that what is good for the environment is bad for business. And I think we really need to break away from that thinking. But that is only possible if people on this call and in many other meetings are seeing practical examples of how investments in renewable energy or energy efficiency or sustainable agriculture can both deliver investment returns, but also be good for, from a societal perspective, giving fair wages to people and obviously addressing environmental challenges. Farouz kindly asked me to focus on the link between climate finance and the COVID-19 pandemic, because at the moment, a lot of governments around the world are basically putting stimulus packages in place to help preserve jobs, stimulate different sectors across the economy. But as a result of it, many more governments will be, the debt levels of many governments will rise further, and also private finance will be squeezed. So how these public stimulus packages are being shaped will to a large extent determine, in my view, the degree to which we can meet the objectives under the Paris Climate Agreement or other international objectives. I think Farouz has already highlighted the housekeeping rules. From my perspective, given that this is a virtual webinar, I would have loved to be in KL myself. From my perspective, let's make it as interactive as possible. I'm both happy to answer questions, clarifying questions during the presentation, and hopefully there will be enough opportunity also after this presentation for the remaining time. So I would like to start with this slide, which has been put together by an organization called Vivid Economics. What they've basically looked at is the link between public stimulus packages to address the COVID pandemic and the degree to which these negatively or positively influence the climate crisis, the biodiversity crisis, etc. What is important to realize is that the total amount of money that governments around the world have made available to date over the past months equals about $10 trillion. So $10,000 billion. It's a staggering amount. Of that, at the moment at least a third is projected to go to what, at least from a UNEP perspective, we would term the brown economy. Oil and gas, airlines, etc., without any incentives to try and switch to different business models. And this is what I mentioned before. We are fully in favor of helping businesses and preserving jobs, but from our perspective, it is important to provide incentives to move towards, say, low emission aircrafts, to move towards different business practices across sectors that have a less negative impact on the climate and the environment. Some notable exceptions, the European Commission has put forward...
Sorry, Ivo, could you just make your slides in the presentation mode for make it a bit bigger? Yeah.
All right, let me see. Is this better?
Yes, better, thanks, okay.
Okay, thanks for that. So some notable exceptions, the European Commission has released what they call the European Green Deal. Basically, what they are going to do is work with the EU 27 member countries to make sure that any public stimulus that goes towards businesses and that goes towards job preservation is in line with international agreements related to climate change, related to sustainable development goals, etc. Other exceptions are France, United Kingdom, Canada as well. But many other countries, as you see here, are not putting any kind of incentives in place to switch towards a low carbon economy. Again, from my perspective, but it would be good to hear your views and see if you agree or disagree with me. The big issue is that governments who are already very much in debt, who will be issuing more debt, will have fiscal constraints to deal with the environmental crises post-COVID. So if this terrible crisis from a human health perspective and an economic perspective is not used as a force for good and as a force for change, my fear is that there will be less leeway for governments to address the increasingly costly environmental crises that we're finding ourselves in. So the UN Global Compact Malaysia chapter has asked me to focus specifically on the link between climate finance and what is called the EU taxonomy, which I will explain shortly what this is about. It will have a far-reaching effect on how finance investments will be shaped in the years to come. Some best practices from a policy, private sector and investment perspective, and then some opportunities in this new normal that Farouz started the webinar with. And then hopefully we'll have enough time for questions as well, and please feel free to put them in the chat box. So first of all, I think it is important to, for those who are not aware of it, is to highlight the urgency of the environmental challenges that we're finding ourselves in. We're basically on track to a world that will be 3.4 to 4 degrees warmer than it was in the pre-industrial age. This sounds like a small amount of warming, but it will lead to the collapse of coral reefs. It will lead to the thawing of the permafrost in Siberia. It will lead to all kinds of tipping points that will increasingly have negative economic and financial costs, as well as health impacts. So for those who do not believe that there is a link between environmental sustainability and the economy, that is just not true anymore. What you see on the right-hand side, anything that is in the gray or red bar, we've already basically passed the threshold of what we can consider a safe operating space for humanity. From the loss of genetic diversity to climate change, to the nitrogen and phosphorus cycle, and to land use systems change, including deforestation. To put it in a summary, looking at the climate, biodiversity, and land degradation, the projected cost from unaddressing the climate crisis in the years to come is scheduled to be in the order of magnitude of more than $200 billion a year, both in terms of physical losses that we'll experience, indirect costs such as weaker economic growth and lower asset value for companies, and uncertainty. And if there's one thing that investors do not like, it's uncertainty. Let me see. The second one, we're basically losing species at a rate that is dozens to 100 times higher than it used to be in the pre-industrial age. At the moment, the expectation is that in the decades to come, 1 million species will become extinct if we're not addressing ecosystem degradation. And previously, financiers and investors told me, well, this is a big environmental issue, but it's not a financial issue. And this is the reason why I created the Natural Capital Finance Alliance, to make the link between how ecosystem degradation is impacting the real economy, but also the financial sector. The Dutch central bank came up with a report last week that basically says that 1/3 of all the assets of the Dutch financial system, which is $1.4 trillion, is at risk from biodiversity loss. So that's a staggering amount of $510 billion that could be written off if we are failing to address biodiversity and ecosystem degradation. And lastly, from a land degradation perspective, there's already a staggering amount of 2 billion hectares of degraded land, which is leading to an annual cost of $230 billion a year, and with a potential further economic cost up to 2050 of $23 trillion. So our economy so far is based on extracting resources and externalizing the environmental cost to society, which is for governments to address. Increasingly, we see that those externalized costs will impact businesses on their P&L, the profit and loss account, either through higher costs or lower revenues. And this will hit the banking and investment sector through write-offs of non-performing loans or lower investment returns on certain types of listed and unlisted equities. So that is the link between the environment, the real economy, and the financial sector. So one, I would say, very unsexy topic is called the EU taxonomy on sustainable finance. Basically, what the financial sector has done over the past years, and I'm sure it has received some attention also in Malaysia, is what is green and what is sustainable. Many banks have issued green bonds. Many companies are claiming to have sustainability related expenditure or revenue, but there isn't really a standard that basically says what is sustainable and what is not sustainable. What the European Commission has done over a period of more than 2 years, involving many experts, from across the European Union is to say, for the agricultural sector, for oil and gas, for forestry, for manufacturing, for tourism, and many other sectors, what activities are considered sustainable because they address climate change, because they address biodiversity loss or other environmental issues, and which ones do not. What is also important upfront to note is that the European Parliament has passed the EU taxonomy as a law, and it will become a law from 2022 for every financial institution to mandatorily disclose the amount of assets that are considered to be sustainable and which ones are considered to be conventional or unsustainable. And the belief is that through this mandatory disclosure, there will be a wave that will increasingly also move towards emerging markets where these standards will become adopted. What are the objectives under the EU taxonomy? It's to address, first of all, climate mitigation and climate adaptation, sustainable protection of water and marine resources, move to a circular economy, so that's reuse of the resources, pollution prevention and control, and protection and restoration of biodiversity and ecosystems. What does it try to do? So what is it asking from every company and bank and investment firm in the European Union is to at least contribute one of the 6 environmental objectives that I've listed here, while at the same time making sure there's no negative impact or trade-off on any of the other 5, with minimum safeguards to comply with. So again, as I said, this will become a law in the EU, but what is crucially important is that if you have a European-based bank, for example, that is doing business in Malaysia, it will have to report its sustainable or unsustainable assets, both in the EU, but also outside the EU. So investments in palm oil or rubber or car manufacturing, for example, those will have to be visualized on the balance sheet of European-based legal entities. So ultimately, given that we live in a globalized economy, this standard is expected to have repercussions beyond the European Union. What are some of the proposed criteria for different sectors? So for transport, you're talking about zero tailpipe and very low emissions. Agriculture is maintaining carbon in the soil, improving carbon capture through forest restoration, for example, and climate smart agriculture. For different sectors, there are different requirements. You can see them here. They're also available online. But they've basically identified for each sector in the economy, and the subsectors, I think there's 167 subsectors in total, what is considered to be a sustainable activity and would therefore have to be reported on from the year 2022, which is only 18 months away from now. The same for electricity, buildings, and forestry. So for forestry, which I focus on a lot, for example, it's about maintaining and improving carbon. If you talk about buildings and infrastructure, it's about supply chain and small or medium-sized enterprises and the degree to which improvements are made in terms of energy efficiency, for example. So that's the first topic, basically an introduction to the EU taxonomy and how this makes a link to climate finance. What are some best practices? So these are the targets that the EU has set under the Green Deal, is a minimum reduction of 50 to 55% of emissions compared to 1990. Improve the share of renewable energy in final energy consumption up to 32%. And achieve energy savings compared to business usual of 32%. So the way how the European Commission frames it and the way how this could be framed in every other country is to say, yes, investments are necessary to make this transition, but ultimately this is an opportunity for businesses and financiers to invest in a low carbon and more resilient economy. You can call it an investment gap of 175 to 290 billion. You could also call it an opportunity to meet that gap, basically. And coming back to my my initial slide, how this links to the COVID-19 pandemic and the stimulus packages. If governments from Malaysia to India and Russia to France were to put those stimulus packages in place to incentivize businesses to invest in energy efficiency, renewable energy, or sustainable agriculture, then it will be easier to see a silver lining in this terrible dark days, basically. And that's why I think the link between COVID-19, climate finance, and moving towards a sustainable economy is so important. If you look at it from a private sector perspective, I think there's many pieces of information out there. I've just used one, which was produced by SUSO and Corporate Knights, which have put together the Carbon Clean 200. So they've basically looked at which businesses have targets in place to move towards objectives under the Paris Climate Agreement of becoming ultimately net zero by 2050. They've basically ranked 200 businesses that are pioneers in this field. I've listed just the top 10 here. What you see on the right-hand side is the financial performance of these businesses compared to the S&P Global 1200. So basically the 1200 biggest listed companies globally. And what you see on the purple line is that there's basically outperformance of those businesses that are basically delivering investment returns in terms of higher share prices and dividends for investors, but which are also having climate targets that are quite pioneering, basically. So the idea again that what is good for the environment is bad for business just doesn't hold true. From an investor perspective, there are many initiatives also ongoing. What I think is important to realize that there will be a growing demand from investors to businesses in the real economy to demonstrate what activities they're taking or actions they're taking to provide fair wages to employees, to make sure that labor standards are respected, but also to make sure that we're moving towards a low carbon economy. One example that I've listed here, and I will share the slide deck with all of you afterwards, is something called the Net Zero Asset Owner Alliance. So these are 26 large pension funds, insurance companies that have basically said, we are looking at every company that we invest in. And if these companies are not meeting the climate targets, we will ultimately disengage from these companies. So there will probably be a engagement process initially, but the ultimate objective is to have an investment portfolio that is what they can call Paris aligned. In other words, aligned with a reduction of emissions by 50% up to 2030 and net zero by 2050. So this will ultimately have impacts on the investment portfolios that these very large institutional investors are managing. There's other initiatives as well. There's a big push now from some countries for setting science-based targets. So basically looking at what science tells us in terms of what emission reductions are necessary, what biodiversity protection is necessary, and basically putting business and finance targets as a result of it. There's the Climate Action 100, well, there's many others. UNEP Finance Initiative last year launched the Principles for Responsible Banking at the UN Climate Summit. They already have 180 banks who've signed up to it at CEO level. The target for this year, or the objective for this year, is for any of these banks is to set targets. So how are you engaging with clients across your portfolios to make sure that they are moving towards a responsible based banking business? There's many others like the Principles for Responsible Investment, Institutional Investor Group on Climate Change. Apologies for the spelling mistakes, by the way. That will increasingly drive how they are, which clients they're banking, and which investee companies they're investing in. So again, those businesses that are well prepared because they can outline what they're doing compared to their peers or the sector peers will probably be more appealing for those investors and banks that have set targets. What are some opportunities in this new normal? As Farouz was starting this conversation, we will likely stay in this pandemic until a vaccine is found, and even after that, it will take some time to move towards a level of economic activity that was comparable to what it was pre-COVID. So how can banks and then financiers push for sustainability post-COVID? I would say is for companies that are linked, for example, to the UN Global Compact Malaysia, is to engage with both your local and especially federal government, is to see what incentives that the Malaysian government, or what incentives could the Malaysian government put in place to make sure that there's incentives being placed to move towards a low carbon, sustainable and resilient economy for Malaysia. That could mean fiscal or trade policies to stimulate sustainable production, processing and trade of goods. It could mean providing guarantees or soft loans to make a switch towards investing in low emission housing or infrastructure or deforestation-free commodity production. The second recommendation, or the second option, is for Malaysian-based businesses also to set targets in relation to the UN Sustainable Development Goals or the Paris Climate Agreement, is to calculate your own emission footprint of your own business, but also mapping what kind of suppliers or client are you buying goods from or providing services to. And to set emission targets, for example, by the year 2030, but also 2050. And last but not least is to then to assess, depending on the type of business, what impacts you're having on biodiversity, forest, and land, and see what kind of means can be put in place to reduce the impact by 2030 and 2050. The last recommendation is a plea to try and innovate and pioneer. I think there is a feeling by some companies is to try to go back to business as usual as soon as possible after the COVID pandemic it's over with. And obviously, I think short-term liquidity is the most important topic on mind for most managers and senior business leaders, is how does my business survive? That is and should be obviously at the heart of what you're doing. But this, again, terrible moment in history is perhaps also providing an opportunity to see what kind of innovation and pioneering can you put in place for your respective business to make a change that you may have wanted to do but have been holding back on for the past years. So from UNEP side, as Farouz started the introduction of me, I've been trying to say, like, what kind of changes can we incentivize for banks and investors to invest in, say, sustainable agriculture and sustainable forestry? I think we see a lot of momentum with regards to renewable energy and energy efficiency, and in many countries, this is now an established asset class. When you talk about forestry and agriculture, this is really not the case. There's very little capital that is directed that does not have a negative impact on the climate, and it does not have a negative impact on nature. We've partnered with Rabobank. We've created a $1 billion partnership with the objective to issue up to $1 billion in loans by Rabobank and other banks that have specific targets around improving rural livelihoods for smallholder farmers, for example, to stop deforestation and to improve agricultural practices. What the bank in this case said is we cannot pay for this transition ourselves. So we've basically engaged with the Dutch government and with other governments to put in place what we call a de-risking capital in the form of guarantees and soft loans to basically pay part of the cost that is related to a longer term loan with a tenor that is not say 5 years, but 7 or 10 years, and which also covers the excess risk of dealing with smallholder farmers, for example. That is the Agri-Free Fund, for which we've raised 93 million so far, and which is operational as of last month. I'll shortly highlight an example in Indonesia with a rubber plantation. Another example is the Green Fund. They've raised about $127 million from Unilever, from Norway, and the Global Environment Facility through UNEP. And again, this is a fund that is available for any business that tries to marry or tries to combine investment returns from agriculture or investment returns from forestry, but to couple that with targets around forest protection and reforestation. This is a bond that we've helped create with BNP Paribas, a French-based finance institution, with Michelin acting as the off-taker to buy rubber at a pre-agreed price for the coming 15 years, and where the plantation itself sits in Jambi, in Sumatra, in Indonesia, and where basically the US government provided a guarantee to lower the risk of this transaction, which enabled a range of investors to basically buy this bond. And I would like to show a video as a result of it, if I can. So let me see if I can do that. I hope you could see the screen shortly.
The future of the environment and businesses are closely interlinked. Climate change now poses the biggest and most likely threat to the global economy over the next decade. Market and reputational risk, as well as regulatory pressure on companies linked to unsustainable soft commodity production, means current business practices need to change, with many already exposed to potential stranded assets. So how do we redirect private capital to avoid forest and biodiversity loss, improve the well-being of local communities, and ensure the agricultural sector thrives through profitable business models? Combining the capabilities of banks, governments, and agribusinesses through blended finance instruments is key to transforming the way we finance sustainable land use. The world's first landscapes bond, issued by the Tropical Landscapes Finance Facility and developed by BNP Paribas and ADM Capital, is financing a sustainable natural rubber plantation on degraded land in Indonesia. In the inaugural transaction, a $95 million bond was issued to capital market investors through structured notes of varying tenors and rank. This successful deal helped an Indonesian natural rubber producer scale up production and yield, while setting aside part of the concessions for forest restoration, ecosystem conservation, and community programs, with jobs provided to local workers for farming the rubber plantations. An offtake agreement was also negotiated, guaranteeing the sale of the majority of rubber grown. In such a pioneering deal, some form of risk mitigation is required. This is where public finance was crucial, with a partial credit guarantee offering security to some bondholders in case of default, helping broaden the investor base and lowering the overall funding cost of the transaction. The success of this project will increase the appetite of other banks, investors, and agribusinesses to finance projects that combine financial performance with clear environmental and social benefits.
We cannot achieve sustainable development if we can't finance it. And for this, you have to bring both the public and the private sector on board.
There is a need for urgent action and mobilization of private sector capital.
What makes us unique is that we have the access to a farmer, The UN environment gives us the possibility to provide extra incentives for the farmer to change his behavior day to day.
These and other successful blueprints can then be replicated across the agricultural and financial sectors, reducing the levels of public finance required and turning sustainable agriculture into an investable business proposition.
So, as Farouz knows, the UN is very good at convening. In this case, we've tried to create some, as I would call, proof of concept deals. Obviously, this is more the exception than the norm at the moment. But there is no limitation for Malaysian banks, investment firms, and businesses to try and replicate this, basically. So this is the final message that I would like to sort of close my presentation with, is to think outside the box of what is it that you can do that still makes business and finance sense, but is moving towards this low carbon sustainable economy that we need to move towards. If you look at the UN Global Compact Leaders Summit that took place recently, this notion of science-based targets was also mentioned there. So the challenge, of course, for every individual business is how do you move towards those science-based targets while looking at your P&L, while looking at your balance sheet and making long-term business sense. So in this case, if there's support needed from international organizations or from, say, the Malaysian government, then I think this is the right time during this pandemic to have these kinds of conversations. So with that, I would like to close my presentation. Thanks.
Thank you, Ivo, for that insightful presentation. I already see some questions being asked. However, as Ivo requested earlier, we also want to make this as interactive as possible. So if any of the participants would like to ask a question directly, please raise your hands and then we'll give you a chance to ask the questions to Ivo. But Ivo, if I can just get the ball rolling. Before that, I'm happy to share that last week we had one of our key members, Sarawak Energy, to sign up to our the Business Leaders Pledge for 1.5 degrees, and being the first Malaysian company to publicly commit towards SBTIs. So that's a great story for us in Malaysia, and we hope more and more private sector in Malaysia would also embark on this journey. We are still on the lookout for the first Malaysian company to commit to carbon net zero, and God willing will come soon. And in that, I like to pick up a question by Irwan, who is coincidentally from Sarawak Energy. His question: can you share the acceptance of the TCFD approach for European corporations for carbon disclosure?
Sorry, didn't get the question. Can I share?
What's the acceptance of TCFD as a framework for European corporations as part of their carbon disclosure? Because earlier you shared many different initiatives, but what is your thoughts on TCFD?
Yeah, I mean, I think I think what really helped the TCFD process is the fact that it was led by the financial industry. So Mark Carney and Michael Bloomberg were the leaders of this initiative, but it was developed with a lot of engagement of and buy-in by banks and investors. And as a result of it, there is a lot of acceptance, at least from European-based banks and investors, even though in practice they are also struggling to try and implement it. I think there is less and less reluctance to try and make this happen. But I think many of them would probably acknowledge in private that it is a technical challenge and that it ultimately also will affect the business, because you need to discuss with clients who are not in compliance with it to see how to move forward with it. And very few banks and investors want to basically disengage from clients because that's bad for business. So I think that is going to be a challenge for the months and years to come.
Right, and a following up question to that, I know as the TCFD is very much based on various scenario planning approaches and how companies are re-looking at their strategies in terms of climate mitigation adaptation. In your opinion, do you believe that companies that already are in the process of changing their structures and strategies to manage climate change would able to adopt or outperform the market during such issues like COVID?
Yeah, absolutely. So I think if you've seen the slide that I've provided about the Clean 200, you see that they're already financially outperforming the S&P 1200. In other words, many businesses that have set targets on objective and absolute carbon emission reductions are financially outperforming their peers who haven't done that, basically. So yes, it is possible. It obviously does require a lot of innovation and thinking by those businesses to make that happen. But if you look at what Unilever, for example, did, they've set a target of halving environmental impact and doubling sales or revenue, basically. They framed it from an environmental perspective, but it is basically an economic or financial perspective. If you reduce energy, for example, or if you reduce water, that is basically a cost saving for the business that ultimately positively impacts the P&L of a business. So if you think from a perspective of where can I save, where can I become more efficient, which suppliers should I deal with, what requirements should I ask, then I think it is possible to already make a lot of low-hanging fruit positive changes that are both good for business and for the environment. And my belief is also that in the years to come, there could be preferential interest rates for those businesses that are demonstrating positive impact for, say, people and the planet.
Right. Thank you for that. So I also like to take this opportunity to invite some questions from the floor. Maybe we can invite Datin Sri Sunita to kick off with her question.
Thank you. Ivo, thank you so much for this presentation. Very useful. I wanted to ask you a question. Should we be working towards decarbonizing? Because there's also a lot of thinking that we need economic degrowth, that the planet simply cannot support both population growth and economic growth. And if we look at your Sumatran rubber Michelin deal as an example, did it result in still net 43,000 hectares of deforestation, even if part of it was retained as forests? I wanted to hear your views on that.
Yeah, I mean, there are a number of people inside UNEP and international organizations who believe we need to have a degrowth or zero growth policy. Personally, I don't think this is possible. I mean, I've lived in Kenya myself, for example, and if you have poor farmers and or bottom of the pyramid, and you tell them that there should be no net economic growth, that's just not possible. There will be more people on the planet. There's more mouths to feed. So I think what we need is sustainable economic growth. So economic growth that is not dependent on the continuous extraction of resources and externalization of the cost to society. I think the mental barrier that we have to overcome is the belief that it is possible to create a circular economy, that it is possible to create a business model that is based on efficiency and thereby good for business, while also being good for the planet. Because if we don't do it and we continue with this business as usual scenario, there will be more economic cost as a result of runaway climate change. There will be more costs as a result of continuous ecosystem degradation. The challenge, of course, and this is what you've highlighted in the Indonesian, the rubber example, is how to create a business model on the ground that works for a plantation company, but is also sufficiently of interest to investors who are very risk averse. So in this case, as you've probably seen, indeed, is part of the rubber plantation is trying to increase the yield on those part of the plantation that is destined for rubber, and to try to use those agricultural practices that maximize rubber production, while maintaining those areas on the plantation, which is quite large. It's about 70,000 hectares, that still contains primary tropical forest, and giving an opportunity to local communities who are living on that 70,000 hectares through, say, a smallholder rubber plantation. It's basically a plasma scheme for smallholder rubber producers. the challenge, of course, is to make this interesting for the plantation company RLU, Royal Lestari Otuma in this case, to make it interesting for the one who's buying the rubber, in this case Michelin, and to make it interesting for the investor. In this case, what was needed was a guarantee by the US government to lower the cost of the transaction, to increase the credit rating of the bond, to basically provide some assurances to investors. And that is the challenge, is to really think out of the box of how to make this happen. The same could be applied, obviously, in an easier way to renewable energy, energy efficiency, manufacturing, you name it. But personally, I don't believe a zero growth economic model is possible, neither for developed nor for emerging markets.
Thank you for this. Just going back to your comment that ESG or any investors are very risk averse. The example given was Indonesia, which is a lower income country, in which there are many, I would say, external donors and partners who are able to come in to provide various innovative financing schemes. Now, if you take Malaysia as an example, we are a mid-income country. We're in a position where we are not poor enough to get aid, yet we are not rich enough to do many of these innovative processes. So, in your opinion, how can a country like Malaysia also adopt such innovative climate financing approaches?
I mean, I don't know what the current debt levels are of the Malaysian government, but assuming that they are at sustainable levels, it comes back exactly to what I mentioned on the first slide, is any public stimulus that Malaysian government provides to make sure that jobs are preserved in Malaysia and to make sure that the Malaysian economy is ultimately benefiting from, again, this terrible crisis. The types of incentives that are built in to make sure that those Malaysian businesses that are probably also UN Global Compact members, to basically provide a push to help you as businesses who are online today, make that switch and basically share the cost of the transition. That is basically what I would advise, because as you said, Farouz, the international donors will prioritize poor and lower middle income countries, and they will say Malaysia is rich enough to do this. I do think there is a opportunity for Malaysia to attract these blended finance models for renewable energy and energy efficiency, as well as sustainable agriculture. I'm pretty sure Malaysia is not excluded from that. So it's really to get outside this mindset of aid and really think about a business proposition where a government is providing taxpayers' money in the form of guarantees and soft loans to help pay for the transition towards more sustainable manufacturing, low emission housing, energy efficient retrofitting of buildings, you name it. There's a lot of low hanging fruits and a lot of investments that can provide jobs for many people in Malaysia, which are good, again, for business and for the economy. I think you're muted, Farouz.
Thanks for that, Ivo. Do we have any other questions from the floor? Anybody would like to share a question or maybe some comments? Okay, while we're waiting for that, Ivo, I have a question in terms of the EU taxonomy and approach. What would be how do you foresee the reporting structure for the EU sustainable taxonomy? How would exporting nations and businesses like those based in Malaysia report such data that is required? How do you see that happening?
The way how I see that happening is that any EU-based business that needs to comply with the law will have to ask that data from their clients. So, say an export, say trade agreement or shipping that's of credit to export a certain commodity that is moving to the European Union, that is paid for by a European-based legal entity. The client will have to report the data on what the bank or the investor will basically have to report, which is around emissions, which is around what I mentioned. So basically, there are a number of indicators. So it will be a struggle for I think the entities to ask that data from clients, but that is something that will come in the months to come. I don't know exactly what that data will be, but it is data around those 6 objectives that I highlighted in my presentation. For those, let me see where that is. Yeah, I don't see it at the moment. Oh yeah, this one here. So it will be data around these 6 objectives, basically. So any legal entity will have to report on this from 2022, and underneath any of these 6 objectives are a number of indicators. So that data will be asked by those entities to, say, clients in Malaysia, for example. And this is also why, even if it's an EU law, it will have global repercussions, because Malaysia does trade with Brazil, and Brazil does trade with the EU, and etc. So because you have this big, powerful economic bloc, basically setting a standard that is expected to be to have impact beyond the European Union, basically.
Just out of curiosity, do you foresee European companies paying a bit more for this kind of say extra disclosures requirement?
No, I don't think so, but I do believe that ultimately sustainability requirements have to be built into the price of the product. So it should not be the producer who has to pay for those costs. It should be the consumer who ultimately has to pay for it. So I think there needs to be a push to see what kind of economic incentives can be provided to consumers to increase the expenditure with relates to sustainably produced commodities. So I could very well expect, for those, that the first reporting in 2022 will reveal very low assets that are moving towards these, say, sustainable assets that I mentioned. What will happen thereafter is the European Commission basically setting a target. And that target can only be met if either those costs are absorbed by the producers, which I don't think is fair, or you provide incentives to the consumers to increase the expenditure of sustainably produced commodities, basically.
Thank you, Ivo. So in the interest of time, as we also like to run a quick Menti poll for the last 5 minutes, can I invite you to maybe wrap up with 30 seconds of your final words of wisdom to our listeners in today?
No, again, just very grateful for everyone who's online. I'm happy to share the presentation with Farouz and Van. And as I said, I mean, do try to use this pandemic not to go back to business usual, but to try and find a way for your business or organization to move towards a low carbon, resilient economy.
Okay, thank you, Ivo. Thank you so much. Please join me for a virtual applause, the new norm applause. But please stay with us for a while. We just want to run a quick Menti poll with everyone here. So for this, I'm just going to hand it over to Juan to walk us through the process. Juan, can you walk everyone through?
Sure. Hi, everyone. My name is Juan. So I think I'm sharing the right screen, am I? Give me a sec.
We can see the Menti screen here.
Okay. Yeah. Right. So if you log into menti.com, all you need to do once you've logged into menti.com is to just input the code 345727. Click on submit. And then you'll see this. I will be controlling the poll from here.
Yeah. So if we could just everybody to just log onto Menti, key in the code which is in the chat box, so we could look at some polls, please.
Yeah, sure.
Okay. Let's go to the poll questions.
Sure.
Yeah. Okay, I hope everybody is logged on. Please feel free to click whichever is the most appropriate answer for you guys. there's only, yeah. Let's give it a couple more seconds for people to log on. Okay, let's go. Let's go to the next one. Next question one. One, can we go to the next question, please?
Yeah, sure. Just give me a second. Okay.
So please do share your insights, because this will help to shape our Malaysianized programs on climate as well. I think, Ivo, in the future, we need to play some background music during this time. It's like eerily quiet.
No, but I like these questions because it's sort of, I think it gives insight for everyone who's online to sort of see what others think. But yeah, we need some music.
Okay, next question, one. Okay, next. Oh, this is very heartening. This would cause a lot of movement towards more positive climate actions.
There's many countries who already have a carbon tax. I think one report, Farouz, I would recommend is there's a report on the state of carbon pricing. So not the state of carbon markets, but the state of carbon pricing by the World Bank. And they've listed every country in the world that has a carbon tax, and also listed how high that carbon tax is. And you see that some carbon taxes are $6 per ton, but some are $130 per ton.
Wow.
So it really depends on the countries on what kind of carbon tax you're setting. But there's many countries already across the world that have set a carbon tax.
Interesting. Next question, one. I think we have just two more questions to go, and then we're done. So this is a rank question. I think you can choose the top, the most important in that sequence.
Oh.
Oh, that's nice. Everybody's advocating a carrot and stick approach. Okay, I think let's go to the final question. Is it the final question, right? One next. Okay, I think with that, we have come to the end of our poll, and thank you everybody for your insights. We will definitely share the slides to people who participate for today, and we continue to we hope to be continuously engaging with each other, because together only we can push the climate agenda in Malaysia. Before we log off, whoever that is still patiently with us, if I could ask you to also come on camera so we can do a group photo, and then we can send this to Ivo. If I can ask everyone to come on camera for a group photo.
I think one needs to sort of stop the sharing, and then
yeah. So one on your cue.
Okay, let's give it a few. Let's give it a couple more seconds.
Sure. So it looks like I'm the only one who wishes it's on a tropical island, you know.
Okay, all right. On my cue, on 3, smile. So 1, 2, 3, cheese. All right.
Okay, thank you everyone for your time today. Please keep in touch. We'll keep you updated for future events, and see you soon. Again, Ivo, thank you so much. Keep in touch. Take care.
you're welcome.
Okay,
Good luck,
thank you,
everyone.
Ivo.
Bye-bye.
Bye.
Haru.
Thanks, everyone.
Hello, Mr. Rizal. Apa khabar? Lama tak jumpa.
Long time no see. How are you, man?
Ayo, bit busy lah.
Are we the only ones left behind, or the others? Oh no, the others.
Sorry?
No, I think there were 7 others. No, there are others. I thought we were the only ones left behind.
Oh, I think one by one they'll be dropping off lah. So you see, everybody agrees to your carbon tax, so we should do it.
Well, you know, we've been talking about this, and see, you know, this is something needed. There's no two ways about it. You can't avoid it, right? Or at least some pricing, some element of pricing.
Yep.
So,
but do you foresee the coming budget will announce something like this?
I haven't had any engagements with those guys, EPU and MYF, so I don't think they're thinking about these things yet. I don't know.
Because
at the moment,
who was telling me? Somebody was telling me that apparently Mewa has said that look out for the upcoming budget. There are things that's going to be connected to climate action lah, but they didn't say what. I don't know. Let's see. Could be another grant to invest in green energy again. Who knows?
Same old, huh?
Same old.
You can do that, but at the same time you need some mechanism, right, to tax pollution, all that. I mean, you know that.
No, I didn't realize that UNEP actually is doing so many implementation thing on the ground. No? I thought this kind of things we can just take and implement as well, you know. So it's a waste lah, you know.
You can roll it out here, or maybe adapt it a bit. Yeah, absolutely.
Are you involved with the JC3? What are they? How's things over there?
No, I don't hear much other than some blurbs here and there. That's all. Yeah, I think they've been busy with the economic issues and SME financing. Yeah, Panjana Prihatin, all that lah.
And
Yeah,
whether
I
they're still,
think that's sort
whether
of
they're
put on
still
the
in,
slide back burner.
whether they're still in government in the next coming months or so lah.
Yeah. New government, old government, but I know those guys are there, right? So they should move on. They should push it.
Yeah, that's right. That's right.
Should do it. They should just push it. Yeah, and get those dialogues with MOF. I just met Deputy MOF yesterday. No, yesterday, 2 days ago. Yeah. So I think that they want to they want to discover new things. Try out some of these things. But it's a lot of capacity building required lah. They need to be educated, aware.
Yeah,
Right?
correct.
So this time around, unfortunately, COVID-19 in Parliament, because Parliament starting next week, so he was just talking about the Parliament session upcoming.
Yeah.
And but unfortunately, most of us can't go there. And I don't know. You remember? I remember you telling me that you had a program coming up there.
Yeah, but everything postponed lah because of this now.
Yeah. February happened.
Yeah.
Sorry, May postponed, and then of course, this one put out very, very limited access. Even this upcoming Parliament. So whatever program outsiders can't happen at the moment.
Yeah, that's the thing lah.
Yeah. But Zafro should get this. I mean, Zafro should drive this. The finance minister.
Yeah, but I heard he's too busy with his political ambitions.
Well, yeah.
Rumor has it he's going to run,
Well, yeah. I think it's not enough just to be a senator. So I think you want to have some grassroots lah.
I also heard.
I'm not talking to the campaign manager.
Oh, is it? Oh, okay. That'd be good lah. I know, but you're right. I mean, coming from CIMB, he would at least have the DNA for this kind of things, right? So let's see lah. Tapi, I mean, between this Zoom call, CIMB pun jerit je kuat lah buat the in terms of deployment still.
And the rest of them are not really moving back. Monan, all those guys.
Yes,